Welcome to Mongo Spaces this Thursday. Really looking forward to an interesting conversation on the Competition Authority and market inquiries. My name is Eric Mokaya. I'm the founder of Mongo Capital. So I've been at it for 3.5 years now, trying to get good conversations on markets and all that in Kenya and East Africa generally. So we do research and analysis. We've been at it for 3.5 years now, and we've grown from zero to building a platform that has 118,000 plus followers. So thank you so much for joining us this evening to get to now also just an engaging conversation on markets and especially on platforms and market inquiries and the Competition Authority. So without further ado, I want to introduce my speakers for today. I'll start with Cecilia. Maybe you can say a little bit about yourself and what you do at the Competition Authority, Cecilia.
Good evening, everybody. I'm Cecilia Cheneze. I am a senior analyst in the Policy and Research Department of the Competition Authority of Kenya.
And then we have Karen. Maybe you can introduce yourself also.
Good evening, everyone. My name is Ninette Karen Morania. I am the manager in charge of policy and research at the Competition Authority of Kenya. Been there for the last 6 years, and I'm here and happy to discuss the work that the authority does under the research department.
Thank you so much. And then we have the host who's also using the Competition Authority handle. So maybe you can introduce yourself and say what you do.
Thank you, Eric. Thank you also to the listener for joining us this night. My name is Mugambi Motegi. I'm the manager in charge of communication and external relations, and equally I've been at the CAK for the last 6 years. Thank you, and looking forward to an engaging conversation.
We'll get started right in, and maybe Mugambi, you can start by giving us a brief overview, a bit of the Competition Authority and a brief history and what exactly you do in the market, really.
Thank you, Eric. I'll try to be as brief as possible because the conversation is about market inquiries. So the CAK, the Competition Authority of Kenya, is a government agency under the National Treasury. We have a dual mandate to regulate competition and regulate consumer protection, so basically consumer welfare. Under competition, it's again divided into two. There's market conduct and there's market structure. So basically, some tough terms, but to give you examples, conduct is what more or less the players in the market are doing. So for instance, if you hear anything about abuse of dominance, we are involved. Abuse of dominance is if you have market shares of above 50%, you have the ability, it's not illegal, but you have the ability to suppress competition in the market. Price fixing, again, competitors in the market, whichever sector it is, telecoms, manufacturing, whatever it is, they're not supposed to be sitting down as competitors and agreeing on prices. Again, agreeing on outputs. So how much product are we going to push to the market? The play of demand and supply. All that about market conduct. Market structure is where you'll hear, and I think that's where Eric was giving us some accolades. We do regulate mergers. Market structure is about how players in a sector are constituted, so to speak. In the banking sector, we have around 40 banks in Kenya. So the structure is the 40 banks. If player A or one bank decides to buy another bank, the structure in the market will change. So market conduct, market structure, how people behave and how that market is constituted. So then the consumer protection bit of what we do is under Article 46 of the Constitution, you have certain rights guaranteed to you. When you go to the market to purchase any product, you're not supposed to be harmed by that product. You're protected. Your economic interests are protected. You deserve to know all the information necessary for you to extract as much benefit from a product or a service by any player in the Kenyan market. So they're in the Constitution, Article 46. Then they are channeled down. They're cascaded down to the Competition Act. That's where now we're the real agency that comes in to secure those rights. So for instance, if you go to things like unconscionable conduct, if you go to a bank and you want a loan, you want to buy a truck, you want to buy a motor vehicle, and they are forcing you to take bank assurance with them, that's called unconscionable conduct, where you're forcing someone who desperately needs something, going over and beyond just to extract value for yourself. That's wrong. Misleading presentations, basically, to put it down, it's lies. You're a seller of a service or a product, and you're telling people that you'll do 1, 2, 3, 4 things, that this product has these capabilities, yet it doesn't have the same capabilities. Their consumer protection is the second angle to it. I forgot, under market conduct also, there's this big, I don't want to mention names, but it's called abuse of buyer power. And you've been following CAK over the last 3, 4, 5 months. It's where someone who has an infrastructure, which is very important to the people selling to them. For instance, the very example we give all the time, the supermarket where suppliers rely on that supermarket to access the market. The supermarket, when they're sitting down to bargain about the contract terms, so they may push the supplier in terms of payment dates, honoring invoices, forcing them to market on their behalf. Like for instance, put some merchandisers at the aisles. If it's agreed upon on the negotiation table in a very open manner, fine. But sometimes that is not the case. It's pushed down the throats of the suppliers. So abuse of buyer power, and it occurs in many sectors, whether it's telecoms, insurance, where you have the insurer, then the suppliers to the insurer are the motor vehicle garage owners, the assessors, where the top guys, the insurer, extract much more value from these guys on the downstream. That's abuse of buyer power. So we intervene in such situations. So it's abuse of buyer power. The cartel conduct is called restrictive trade practices. There's the element of consumer protection, and then there's the element of mergers and acquisitions. So we are a government agency, more or less. We are based in Nairobi, but we have an online portal which is accessible on our website, www.cak.go.ke. We offer our service free capture of acquisitions, where the parties filing for mergers have to pay some small fee during the review process. But everything else, when you lodge a complaint with us, it's all free. When you lodge a buyer power complaint with us, it's free. If you experience abuse of dominance in your area of work as a consumer, we give you off the services for free. I'll let the conversation steer to the topic of the day. Mokaya, you can take over. Thanks.
All right, thank you so much. Let's start with Ninette. Maybe you can tell us a bit about a market inquiry and why competition agencies usually conduct market inquiries.
Thank you, Eric. So market inquiries are a tool that aids competition agencies to understand the market structure or the markets that they regulate. And of course, through the market inquiries, then the agencies obtain knowledge to be able to analyze the economics in the market they are in. These factors could be like barriers to entry, competition and concentration levels, then to be able to decide on the next way forward, whether it is to conduct advocacy or to do investigation. And there are various countries or jurisdictions that have market inquiries in their laws because of the importance that has now been attached to market inquiries. Of course, Kenya is one of them. Our act empowers us to conduct market inquiries. And over the years, we have conducted quite a number of market inquiries. So market inquiries, in short, is an extensive research in a certain identified area to be able to understand. If I could quickly talk about some of the objective of market inquiries in Kenya, with relevant examples would be one of the objectives to identify anti-competitive practices that there may be. An example is an inquiry we conducted around 2016-2017 in the cement sector. So it was noted that there's a lot of concentration in the cement sector. There were very few players, and therefore a lot of price collision, a lot of cartel-like behavior in the sector. So we went out to understand what's really happening in the sector. And of course, after the inquiry, we found out that there's the anti-competitive conduct that's going on in that sector. And the market inquiry then recommended an investigation. An investigation was conducted and some players were found culpable. And of course, I think in 2021, the investigation was concluded. The players who were found culpable were fined. And resulting from that, the market has been regularized. And based on then an impact assessment that was later conducted, we found that based on that intervention, consumers were able to enjoy price reductions. Another objective of market inquiries is to support regulatory reforms. Here is where, based on how the market is behaving, we're able to advise either the need for a new law or the need to review a certain policy so that markets are able to work better. A good example of this is in 2017-18, there was a lot of retail business. And I think we remember Nakumatt, we remember Fumi, which were big supermarkets in Kenya. But there were a lot of also other complaints from the suppliers who are mostly SMEs, that they would supply and there was delay in receiving their payment. So again, we went out and conducted a market inquiry to understand what's happening in the sector. And based on that market inquiry, that is how we recommended to the National Treasury that they need to regulate the retail sector to ensure that suppliers are able to receive their payments in time, and basically to deter abuse of buyer power, which my colleague has already talked about. So, and based on that, then the Competition Act was amended and we were able to get powers to regulate abuse of buyer power, which has already been talked about. The third objective why we would conduct market inquiries is for advocacy purposes and basically to remove any regulatory obstacles that may be in the market. I want to believe all of us use the USD. For example, if you want to check your bank balance, there are some 3 figures. You'll press star, some 3 figures, then hash. So that is another area which we have looked into using our market inquiries. Again, there were so many complaints on the cost of USSD some years back when you would want to check your bank balance and you were being charged about 10 shillings for that service. So when we looked into that market, then we made recommendations to the then dominant player on the need to lower their prices in order to not only increase consumer welfare, but also to open up that market to enable many more users, many more consumers get access to that. So those are basically the reasons why competition agencies conduct market inquiries. And the Competition Authority of Kenya has conducted about 14 inquiries since its inception in 2011, most of which have produced recommendations that have helped to correct the market failure that were there. Thank you, Eric.
Very good introduction. So I'm curious, there are lots of topics you could do a market inquiry on. How do you prioritize and how do you select which topics to do that? That's 14 inquiries so that you've done over a period of 13, 14 years. So that's almost one per year. It seems like there's extensive resources that go towards a single market inquiry. So if you can give us a bit of a flavor on how much time does it take to conduct one, how do you prioritize which one to do, and how do you select which topic to dig deeper into? Do you do like a brief overview first before you select a topic to go deeper into?
Yes, to answer the simpler question there of how much time, on average, it takes 1.5 years to finalize a market inquiry. Sometimes it could take longer depending on what we are focusing on and, of course, the complexities of collecting data and all that. So the market inquiry steps involves developing a concept. First, we prioritize. We have a prioritization criteria that enables us to determine what to focus on. So this criteria lays down the attributes to look at. For example, we are a government agency. Obviously, we are guided by the government policy and government priorities. That is one of the things we have to put into consideration before deciding what to study on. For example, now in these 5 years, the government is focusing on agriculture, is focusing on SMEs, is focusing on digital. Those are things that we have prioritized. The second thing is if it's a new area of focus, for example, when digital just came in or digital economy has been growing, so we need to understand the market structure and the conduct in that market. So that would be another criteria of prioritizing the market structure. So depending on the emerging areas.
I seem to have lost Kari there. We'll come back to her in a few so she can give us a third criteria. But in the meantime, Cecilia, maybe you can give us a bit of an introduction to the market inquiry that you specifically helped conduct and what are the objectives, at least from a high level perspective, and why you selected that topic.
The authorities did an inquiry on online food and groceries delivery platform. And this was chosen out of the many digital markets because of various aspects. And we wanted to understand how the market worked at that time. Remember during COVID, so many people took up online food and groceries delivery. And we wanted to understand if there were any competition issues or consumer protection issues that were there. But basically, to give a brief overview of the inquiry is that we as an authority, we noticed that there was a lot of growth in the digital markets in Kenya, and everywhere else in the world, digital markets have created challenges for competition enforcement, and competition agencies were dedicating so much time and activity to digital markets to understand the markets and to see the approaches that work best in this market. Being a new market, there was not much to go with. Some agencies did investigations into cases of abuse of superior bargaining position, abuse or misuse of barriers to entry that were associated with data aggregation, and so many other aspects. So there were agencies that took up investigations, market studies, and review of their enforcement instruments. And this basically was to strengthen institutional capacity in handling digital markets and also to build knowledge to address the specific challenges that are brought about by digital markets. So in Kenya, in our case, the main objective of the inquiry was to understand how e-commerce platforms work and to also suggest any regulatory and policy options for competition and consumer protection enforcement. So the specific objectives were to identify the players, to assess the role of data. As we've said, there's a lot of data aggregation, and also to determine the consumer protection concerns that are there and to assess the viability of our framework. We did the inquiry in Mombasa and Nairobi, and we were targeting the platforms, the online food and groceries platform, the retailers who sell through the platforms, the e-payment services, the courier, the consumers. So we also interviewed the regulatory agencies who have laws that touch on digital markets. We had key informant interviews with trade associations, consumer bodies, and other relevant respondents. I'll go to the key findings of the inquiry. We found out that most consumers preferred Glovo as the online food platform, followed by Jumia, which has since exited the market, but Glovo was the most preferred, Jumia second, and then Uber Eats was the third one. We also asked the retailers to tell us, because we wanted to understand how much product the retailers were pushing through the platforms so that we see the scope of the business that they were doing through the platforms. And we found that 79% of the business that retailers, and retailers in this case will include the restaurants who sell their food through the platforms, and also the grocery stores who have an online segment. And 79% of their business is still in the brick and mortar shop, with 15.8% being through the platform. So it's still a considerable percentage of the product that they're pushing through the online platforms. And we asked retailers if they were restricted. We wanted to know if there were restrictions by the platforms, and we found that there were no restrictions. Over 90% of the retailers told us that they were not restricted in any way to stay in one platform, and they were not required to match. So some platforms require the retailers to match the prices that they are offering in the platforms with the prices that they are offering in other sales channels. And the retailers said that they were not required to match those sales terms. So we also wanted to know if there were exclusivity agreements. We understand that there are some promotions that are run through the platforms, and for running those promotions, there are agreements between the platforms and the retailers. But most of the retailers said that they were not required to run exclusive promotion, but there were some promotions that are joint. So if the promotion is joint with the platform and the retailers, then they are not allowed to run a concurrent one in another platform. But if they were running their own promotion, then they are allowed to run the promotions across the platforms. They were not restricted to a certain platform. So we also wanted to know who sets the prices in those platforms. And we asked the retailers, we asked the platforms, and we established that the retailers were able to input the prices in the platforms, and the platforms only had their commission and delivery costs. We also asked consumers the most preferred payment methods, and they said that mobile money was the most preferred. And reasons that consumers gave were because it's convenient and it's available and easy to use. So those were the major reasons why consumers prefer to use mobile money. On courier services, we wanted to know the balance of power, because there were so many complaints from couriers about the payment. And we established that the requirements to be a courier across the platforms were similar, and the variations were based on very few elements. Like we established that there are bicycle riders, and we also have motorcycle riders. So the requirements varied because of maybe the means of transportation that the couriers were using to deliver the products to the consumers. But we did not establish any entry barriers for the couriers. We also wanted to know the charges per order by the platforms. We also did a survey of the charges per kilometer, and they were similar across the platforms. So couriers said that their major challenge when it comes to working with the platforms was unfair terms, because they were not given room for negotiation, and the pricing was very poor according to them, because they could not negotiate the delivery charges that they charged. The platforms were in charge of that. They were the ones setting the prices for the couriers. We also established that there were some data-related consumer protection concerns, and one of them was inadequate mechanism for consumer consent. We found that consumers have not chosen to accept or decline data-related terms and conditions, because the consequence for declining is then discontinuation or their bad access to the platform. For consumers to use the platforms, then they have to give consent for their data to be used by the platforms. So although platforms clearly indicate the intended use for that data, there is lack of that consent for the usage of the data by the platforms. And consumer data is the biggest thing for the platforms. They use consumer data to optimize their services. They use it to improve user experiences. They use it to boost their operational efficiency. And they also utilize the information for other business segments. We also looked at the frequency of consumers for shopping online, and most consumers indicated that they shopped at least once for food and groceries online. And most of the consumers of online food and groceries are between the ages of 21 to 30 years. That is 76% of the consumers. We also looked at the choice of consumers for onboarding platforms, and we found that most consumers had 2 or more platforms that they were buying food and groceries through, which shows that there is a lot of multi-homing on the consumer side of the market. And there was also multi-homing on the restaurants and the grocery stores side of the market, because they were onboarded on more than one platform.
I noted 2 things that you said, data concerns and consumer consent not being obtained, especially when it comes to matters data privacy, and the poor pricing for couriers. I think those were 2 issues that I noted from your research.
And also issues of customer service. And so we asked the consumers, the retailers, the platforms, and the couriers, which were the most complained about issues in the online food and groceries. And they indicated that the major issue is delivery delays, and there's also issues of poor customer service and misrepresentation of product information in the platform. So those are some of the major issues that we identified during our study or our inquiry. And so delivery speed still remains the major factor for consumers. On issues of data, consumers had issues with what the platforms were using their data for, but they did not know where to complain about that. I think I'll reach there.
I'll come back to you again for more, especially that bit on where to complain. I think that's been a bit of a sore spot the couple of times I've been ordering in Nairobi. At this point, I want to encourage the audience, if you have any questions for the team here, just below our pinned tweet, you can just write a couple of questions that you have on this specific market inquiry on online food delivery platforms. So if you have any questions for our guests, just below our pinned tweet, you can write them there. You can also DM us so that we can be able to check some of the questions that you've sent us, and you can also request to speak and then be able to give you a couple of questions. So we have 20 minutes to go before we close the session, so it would be nice if you can send in your questions as quickly as possible. So before I go back to Cecilia, so I wanted to give a few minutes to Kari to maybe tell us a bit. So when you get such research from a market inquiry, what do you do with it? How do you disseminate it? And how do you proceed from an inquiry, the results, and then maybe towards maybe competition law enforcement and maybe influencing policy reforms? This is my first research, at least I've noted. So it will be interesting to see how it's turned upon. So maybe you can tell us what happens after market inquiry, Kari.
Thank you very much, Eric. I think I'll just quickly go back to what I was talking about before I was cut off. My last point on how we prioritize our market research is based on the impact of the inquiry to the sector. For example, we note agriculture is one of the biggest economic driver in Kenya. So we would seek to understand what are the issues in there, and of course advise the government on any competition and consumer issues that may be hindering the growth of agriculture. So that's the last point I want to talk about on prioritization. On to your question, what do we do with the market inquiry recommendations once we have finalized? First, we disseminate through various ways, one of which is what we're doing now. Another one is we publish on the website, on our authority's website, and we also write various articles and opinions giving further analysis on what the market inquiry brought out so that our stakeholders can understand better. The other thing, how then it moves on from recommendations to perhaps a policy paper or a recommendation to review the law. Once we have done, there are some recommendations that may be relating to other agencies within government. So I'll give an example. When we conducted the digital credit market inquiry, the recommendations pointed towards regulating that market. But that market is a financial sector which has a regulator already, which is the Central Bank of Kenya. So being the recommendation then, and we already have a working relationship with the Central Bank, we have a memorandum of understanding. Then we shared the recommendations. Of course, through the National Treasury, we shared the recommendations to the Central Bank and made them understand that this is what the market inquiry pointed out. There is need to regulate digital lenders because there were so many consumer issues that came in, including fraud, including unregulated interest rates that consumers were being charged. Through that, of course, we all know that regulation was developed for the digital credit players. So that is one of the ways we do that. Another way is if from the market inquiry, then there are some anti-competitive issues that have been raised, then we go on and recommend for an investigation. So we pass on these recommendations to our department that is in charge of enforcement and compliance at the authority. And we tell them this is what the market inquiry told us. And we think there could be some anti-competitive practices that are going on. So then we go on and conduct an investigation to better understand there. The other way, a market inquiry could recommend that we just do advocacy. There's no need for hard enforcement, just soft enforcement so that it's easy to change the behavior in the market and to the benefit of the consumer. So that is how we implement the recommendations of a market inquiry.
Thank you so much for that. Back to you, Cecilia. Now you can proceed in terms of some of the issues that you'd raised. I think one was the issue of consumers didn't know if they have an issue with the online platforms and delivery, they don't know where to raise concerns. There's a friend of mine who's also experienced that kind of a problem. So maybe you can tell us, what did you find in that regard and what are some of the recommendations from your report?
Okay, thank you. So we asked consumers, we asked the platforms, we also asked the retailers who handles consumer complaints because we wanted to know how the consumer complaint handling mechanism was in the online food and groceries. And also we wanted to know the redress mechanism that is there. So we found that most of the complaints that are there are handled by the platforms themselves, and some are also handled by the retailers, especially the issues to do with delivery of wrong products or incomplete orders. So the restaurants and the supermarkets, most of the online grocery segment is done by the supermarkets. That is what we found out. So most of these complaints go unresolved. And we wanted to know if the platforms had complaint handling mechanisms, and 83% of the platforms had internal consumer complaint handling mechanisms. But most of them, like 40%, did not have a specific terms and conditions for their food and grocery market segment, because some of these platforms run like an ecosystem market where we have, for example, Boat Food, which has the transport segment, and they also have the food segment. Some of the platforms did not have specific terms and conditions for their food and grocery market segment, which makes it very difficult also for the authority to know what terms and conditions apply to what segment of the market, because they are generalized. So we also found that some platforms handle their complaints, the consumer complaints handling office or the customer services outside Kenya, which makes it difficult now for the consumers to follow up on their complaints because they do not have an office in Kenya. So when they're sending their complaint, then the complaints are handled from another country. As an authority now, we are not sure which law now applies if in the resolution of that complaint. So we also have consumer redress. As I said, most of these complaints went unresolved because consumers maybe were tired to wait or of waiting, because maybe if the headquarters of that platform is outside Kenya, then you don't know how long you're going to wait for your complaint to be resolved. And this is food or groceries, which is a perishable. And if you're ordering for food you want to eat now, you don't want to wait for tomorrow. So most of the complaints went unresolved. And so we also asked consumers how they would want their experience in online food and groceries enhanced. And most consumers said they want data protection enhanced, but there are not many complaints on data because we did a sample of the complaints that consumers were sending to these platforms, and data related complaints very low. But when we asked them how they wanted their experience enhanced, then data protection was the highest, which makes us now go back to the point that consumers are forced to consent to the data related terms and conditions, which the authority pointed it out. And there are things that maybe the authority is working on to maybe address the aspect of data protection. And this can be addressed together with the Office of the ODPs, which handles issues of data protection. So these are some of the issues that the authority is looking into, maybe to address consumer issues that were there in the online food and groceries delivery. Thank you.
I'll ask Ninette something about consumer having some data issues. So what are some of the ways to resolve that? What can be done about consumer data issues that they seem to be raising a lot in the research?
Okay, thank you, Eric. As Cecilia has pointed out, the Office of the Data Protection, the one mandated to handle any data privacy issues. But from where we sit, we see an opportunity in partnering with them. Given our advisory role as the competition authority, we have an advisory role to advise on competition and consumer protection matters. Then I see a need for us to partner with ODPC in dealing with this consumer issue. And these consumer issues are not just only about data privacy for the consumer, but there also arises the need to work together with ODPC so that we're able to handle any of these infractions that may arise because of data, of course, simultaneously and expeditiously, because even through the digital economy and all of these issues around data, there are some anti-competitive practices such as bid rigging, such as cartels that are coming up through the data system. And that is what we are seeing coming up even in many other jurisdictions, because people are using data, you're able to collude. And also that if you're the one with the highest quantity of data, then you're able to foreclose other players from coming in, which are all anti-competitive. How we can deal with them is through partnership. And we have also seen in many jurisdictions, the competition agency and the Office of the Data Protection are working together. In some jurisdictions like the US, their data protection office and their consumer protection agency are working very closely to ensure that are perpetuated through online platforms are dealt with very fast.
Thank you so much. And then in terms of regulation, do you think this market needs to be regulated? Karen?
I think it should. I think it has reached a stage where it needs regulation. And this is because I think Cecilia pointed out in the analysis, there are various laws that are regulating this sector. There is no specific law that's regulating the data or the e-commerce sector. I think there is a need to rethink or to see how best to work. There is a law under CA, a certain section. There is another section under CAK. There needs to be convergence on legislation, be able to promote competition and to handle consumer protection issues expeditiously. And this would be done best through collaboration of the various agencies that are in that area, or alternatively, strengthening or reviewing the Competition Act so that then we're able to look at emerging issues like superior bargaining position, emerging issues of market position, among others. So yes, there is need to regulate.
Thank you, Ninette. Cecilia, maybe you can give us some of the other conclusions that you came up with in the study.
As Ninette has pointed out, we reviewed various regulations in Kenya that touch on digital markets, and there is no explicit regulation. So there is need for those fragmented laws and regulations to be put into one law, or maybe for the regulators to work together to come up with a solution for that. And we also found out that there was no manifestation of market power when it comes to the platforms, because the retailers were able to set their own prices. They were not restricted restricted. There were no requirements to match terms of sale. But with the couriers, we found there was that imbalance of power. And with that, then there is need to look into the terms and conditions for the couriers so that they are not treated unfairly in these platforms. So on the data-related findings, there were issues of locked-in effect due to the consumers did not have a choice to accept or declare. So acceptance or decline of data-related terms and conditions were not a choice the consumers could take in this, because they will be discontinued. Then there were issues of some platforms not having their internal consumer redress mechanisms because of the lack of the explicit terms and conditions on their online food segment. So for that, the recommendations that the authority came up with was to review existing powers and approaches, especially the enforcement powers of the authority, to ensure that the authority can be able to initiate cases on their own motion, like consumer protection cases, because as of now, the authority can only handle the consumer protection case that they receive from consumers. And if these cases, like we saw on data protection, are not lodged with the authority by consumer, then we are not able to handle them. There are also issues of we cannot investigate abuse of superior bargaining position because those provisions are not in our law. We also have issues of consumer protection, whereby there is need for consumer awareness to know their roles and responsibilities when it comes to digital markets. So there's need for that, and also to address the issues of delivery delays and also product-related complaints that we identified during the study. So there's need for the authority to address that with the platforms. Also, there's need for collaboration because of the fragmented laws that exist that regulate e-commerce. And there's also need for a lot of advocacy when it comes to digital markets. And those are the recommendations that came up from the study.
Thank you for all that. Now, Kari, any quick top of the mind takeaways from that comprehensive research?
I think Cecilia has really nailed it, so I do not want to add anything more. But what I can say about market inquiries, Eric, the challenge we've had at the authority with market inquiries is that some of the stakeholders seem to think that a market inquiry is an investigation. No, a market inquiry is a friendly way of trying to improve how business is working. It's our way of trying to understand what are the market failures and what can we do as a competition agency to ensure that you're able to do business well, that our consumers are well served, and that you're able to contribute to the economy. When we approach stakeholders, this is an appeal to the stakeholders online, is that we are here to ensure that businesses work well and that you're able to make money from the business you're doing through proper working market. Thank you.
Thank you so much on that. Mugambi, do you have maybe something that you may have missed in terms of the discussion points today? I think one of them is also how they can explore CAK as a complaint channel. Do you think that's something that you can emphasize?
Thank you. Before even I go to the CAK exploration, thank you, team, for the elaborate explanation. I am a champion of simplicity, so I wanted to explain some few things, 3 terms that have been used, which perhaps some of our listeners are not aware. One is market power. So market power in competition law is related more or less to dominance. So dominance in our law, the Competition Act, Cap 504, talks about 50 plus. So if you own 50 plus of the market, then you're dominant. Per se, it's not illegal. The abuse of that dominance is what is illegal. Market power, on the other hand, is someone in the market who can set prices, can determine sales terms without being bothered about a competitor. So they may even have 25% of the market, 30%, but they have market power if they can go about their business without bothering about their competitor. So there are 2 terms that my colleague Cecilia has used. There's one, superior bargaining position, which is related to abuse of buyer power. She said correctly that currently we are not able to attend to these issues. Abuse of buyer power, I said, it's where there's a person at the top who owns a critical infrastructure, and everyone else who is selling to that buyer is very dependent on them. The buyer may abuse that position. That's called abuse of buyer power. But we find instances where the seller selling to this person who has the critical infrastructure has the bigger negotiating power. So when they get to the contract negotiation stage, the tables turn. It's flipped that the buyer is more or less in a compromised positions. There are suggestions, there are recommendations. We are currently going through the normal amendment channels. If they pass, then we'll also make them public. So to attend to those issues, then there's something called strategic market position. Strategic market position mostly deals with entities that are in the digital space, and particularly those who are in the data. They own a platform that extracts a lot of data, and this data is quite useful to other competitors to compete. So they may own 5% of the market, but they have a platform that has so much data that anyone else to compete fairly in that market, they need access to that data. So they may abuse that position. So they are a bit technical. They may sound a bit tough, but I hope I've explained them to the best of my ability. My closing remarks would be, number one is about publicity. CAK prides itself in being a champion of access to information. And make use of our website if you're interested in competition law matters. We try as much as possible to publish a lot of information there. As Net correctly put it, we had opinion pieces about this issue, this inquiry. We have this Spaces event. We publicize it on our LinkedIn page. So follow us on Twitter, follow us on LinkedIn. We also publish on Facebook. We have a WhatsApp channel. Make it more vibrant. We'll continue posting information there. But our website, if it just take time, we'll revamp it over the next 1 month. Make it a bit simpler for everyone to get information. Make use of it if you're interested in competition law matters. It's quite accessible. I've seen again, Mokaya, you've reposted our e-filing portal. As I mentioned earlier in the conversation, we do not charge a single cent for anything other than merger filing fees. So unless you're buying another company and you meet the threshold of $1 billion plus, don't pay for any service out there from anyone who says they are related to CAK. They are not. We don't charge unless you're buying a company and you meet the threshold for full merger analysis, which is a B plus combined between the buyer and the seller in this case. So make use of it. We have an email, complaints@cak.go.ke. We'll respond to you in a day or two, and then we'll take the process through the normal channels. Give us time, because even if you accuse anyone of any wrongdoing, we have to give them a chance to answer or respond to your allegations. Again, you could call us. We have a phone number. We don't have a toll-free one yet. +254 20 277 9000 +254 20 277 9000. Again, it's free. So if you miss the portal, it's a bit lengthy. I don't want to spell it out. You can go to our website, www.cak.go.ke. Under the e-services tab, I think the third on the website, you'll just get everything there. All our work is done online. We are a fully digitalized entity. So if you want to file a merger, if you want to file a consumer complaint, if you want to file a complaint about price fixing, about abuse of dominance, everything is done on that portal. And it's free of charge with the exception of merger filing fees. So I'm very grateful, Eric, unless you have another question.
One more thing, and a very interesting read is usually your annual kind of report, where you have details of some of the complaints that consumers usually have to you. And I would want to maybe throw a question at you. Is there a consumer complaint, inquiry that you had a look in the latest annual report that was very interesting to you? I find them very interesting because they do become sources of oftentimes, and maybe people don't notice, is the Business Daily picks them up as news stories a lot of times, especially once you release the annual report. Maybe you can speak to one or two that you may have received really interesting from your perspective.
Let me first also thank you for being part of this journey. When we publish in our report the determinations, I see you pick them up quite fast. So we are grateful for that. You're a pro bono publicist for the authority, so we thank you and we are grateful. And the annual report we published, I think, maybe 5 weeks ago. It's on the website, all our annual reports on the website. If you go to the back pages of the annual report, you'll find we are required by law, by our Competition Act, to publish all the matters. Majority of the cases that we are attending to are in the financial sector. There's aviation, a bit of aviation. Additionally, you'll find that people miss a ticket or requested for another booking, and the carrier did not meet the terms that had been agreed to. In the financial services sector, you'll find a lot of people who are exposed to hidden charges. When you're going to get the loan, you're going to get a facility, whether it's a personal loan, whether it's asset financing, you're not told about the terms and conditions entirely. As I said, under the Constitution, cascaded down to the Competition Act, for you to fully enjoy the benefits of a good or a service, in this case, the example I've given is a service, the person selling the same to you should give you all the full information. If it's a good thing about where to get parts, where to get spare parts, if it's a service, for instance, a loan that I'm talking about, you should have a proper breakdown of how much you'll pay, the percentage, the interest rate, the penalty, if you follow payment. So there are a lot of cases around that. But what we are seeing a lot, increasing complaints bordering on the style of business, or I don't know, for lack of a better word, where the rate exceedingly egregious to our consumers, our fellow Kenyans. People are not being told what to pay. So you'll find cases where someone took a loan of 300K, they want to pay 500K, but they end up paying the 500. When they're going to finish and getting a clearance letter, they're told they still owe another 500,000. It's just strange to look at them. Those figures taken down families, and that's what we're seeing quite a bit of in the market right now. But it's a non-exhaustive examples I've given. If you want, just go to our website under the policy and research segment. Under the annual reports, you'll find around 10 or 9 annual reports. The latest is there, 2022 to June 2023. At the back pages, at the appendices, you'll find every single matter we've attended to over the last financial year. And the next 1 month, obviously, will be done with the financial year. And as I said, we are pro access to information. We'll publish everything that we've done over the last financial year to our stakeholders, who is the Kenyan public. Thank you.
Yes, one thing I noted in the latest one, there was quite a couple of complaints on SACCOs. So we do hope to host on our Twitter space sometime soon, so to hear some of the complaints there. So back to Kari and Cecilia. So maybe you can give us your closing thoughts in that regard. Perhaps a question I would throw to either of you is, would having a local office for some of these online platforms be of help to local consumers who have a lot of complaints against them? So we'll start with maybe Cecilia, and then we finish with Karen. Answer that plus your closing thoughts as we wind up the conversation.
I'll start with your question. Having a local office may help in that if a consumer complaint, for example, is not handled, then the consumer knows where, or might know where that office is and where they can follow that up. And also for the regulators, it's very easy to follow up a company that has a local office. You know where they are physically located. And so if they're online, how do you follow them up? If you send an email and the email is not replied to, or you send a letter, it's not replied to, then where do you get these companies? So it's a good thing to have a local of where the government, the regulators, and the consumers can get you. So my closing remarks will be that the authority needs a lot of work in the digital markets, and we are up to the task. We are doing a lot in that space, especially on consumer protection, and we have quite a robust law in consumer protection, but we are not quite there when it comes to digital markets. So we are doing a lot, and I hope we will be able to help consumers and also help business in the markets. Thank you.
All right. Over to you, Karen.
Thank you, Eric. Answer your question. Yes, a local office would obviously hasten or fast resolution of consumer complaints, and also gives confidence to the consumers when using this platform, because they know they have a physical touch with the service they are using. I appreciate the time we've had to elaborate on market inquiries.
I thank you, Kari, on that. On that note, from what I've learned at least, and also from what you discussed today, is a market inquiry is more to get to know the space and what's happening. And what happens a bit from observing markets abroad, and even in Kenya, the digital space moves so fast that regulation catches up with them much later. There was an interview a couple of months ago that I was listening to, and the formation of M-Pesa and how it started and all. There were lots of objections, but then what I heard the CEO back then was Michael Joseph saying that they decided, okay, let's just launch the product and then say sorry later, instead of just waiting until the regulation is formed so that you can then launch the product. So I think that's usually the approach a lot of these online platforms do. So they just launch, come into the market, give the product, and then consumers have a lot of complaints in the process. And then as we've listened to the whole conversation, it seems like there's not really clear regulation on some of these platforms. So I think such inquiries inform the regulatory aspect of it and policy, which can also help the consumers at the end of the day, because I think, as always, the market is sometimes way ahead of regulation, and regulations takes time to catch up. And that's common not just in Kenya, but also abroad. So thank you so much for this market inquiry. Very informative discussion. Gambi, unless you have any closing thoughts, I would also close there. Any closing thoughts from you?
I think I'd cleared my bit, but again, I just want to reemphasize that our website has a ton of information. If you want anything from CAK, like my email is public, mmotegi@cak.go.ke, or you can send to the official email info@cak.go.ke. If you're seeking information, we'll give it to you. We'll obviously go through the internal procedures or checks to see what can be shared, what can be shared. And sometimes that it's just a challenge that I'd want to pose perhaps to everyone. All of us are consumers. Kaya has just talked about a complaint handling system. My challenge to you is try us out and see whether what you're preaching is true or not. If you have a complaint, try us out. Don't just share it on Facebook, on platforms or groups I see. Take the extra step to use the regulations which are promulgated for you or on your behalf to see whether you can get redress. Try us out and then make your own conclusion about CAK's complaint handling mechanism. Thank you.
Thank you so much. And one more thing, maybe from the report, if the complaint is not under their jurisdiction, they usually refer you to the proper authority to go to. So I think that's very important and something I picked from the annual report. The phrase I was looking for, that some of these tech platforms, their modus operandi is that they would rather ask for forgiveness than ask for permission. So I think you go ahead and then you launch, and then perhaps later you get the permission once the law catches up. So thank you for this market inquiry on online platforms. I hope it informs more discussions on this, and looking forward to hosting you guys again soon to discuss more. For people in the audience, thank you so much for joining us on these spaces today. Hopefully they've been as informative as they can be. Keep an eye on our timeline for more discussions on markets. We want to be an informed investor and an informed listener in terms of our business and markets in Kenya.